This is Mark Anthony with Mercury Time Price Analytics with our end-of-day algorithmic trading update for ESNQ bonds and crude oil. It was another great day, and this is an example of the kind of day you can put together when you have extraordinarily precise mathematic algorithms. So we had this huge move up in Globex, and the RTH open, pardon me, was right in this area, 32.84-ish. And if you were long, you made money, unless you kept it through the end of the day and then you gave it back. Now, we trade both sides of the market, long and short, and we've got a very, very deep toolbox. We have our proprietary day trading and swing trading algorithms for our subscribers. They have a live chart, so they have the day trading algorithm on one chart. They have the swing trading algorithm on the chart just to the left. These run on different time cycles. And part of the secret sauce, and I say part of it because there is no trading service anywhere in the country that provides the depth of tools and advice and commentary all throughout the day that we do. So our proprietary algo is just one tool in a very, very deep toolbox. Now, we booked over 30 handles today. And you're probably wondering, well, if the day RTH started, call it 32.84-ish, and now in Globex it's trading down within about 4 handles. I mean, how do you book 30 handles on a day like that? We have very strict risk management guidelines. We have a mathematical formula that gets us into trades. And I'm not just talking about the algorithm you see on the screen here, but we have a very deep toolkit of mathematical algorithms that run on 7 different time cycles, and these are the same time cycles that the institutional algos run on. The ones that they spend millions of dollars developing and testing are available for individual day traders and swing traders. But that's just one part of what we do. So, and I'll give you an example. In addition to the live chart that our customers see on Zoom, we have a new code every day, and the live chart runs every minute that the market is open. But in addition to that, we have a subscriber Slack channel, and I post all the trade alerts. So you've got full accountability in real time all day long, every day. If you're a subscriber, you can see this, and you can scroll back as far as you want. I had one losing day in December, one in January, less than 3 handles both times. Now, that has nothing to do with my trading ability. It has everything to do with the mathematic algorithms that we make available for our traders. If you're a good trader, we will make you an excellent trader. If you're a new trader, we will walk you through trade entry, risk management, legging out of the trade, taking profits as you go along. And so if you're a new trader, I've been doing this for well over 30 years, thousands and thousands and thousands of dollars of mistakes that every good trader makes. We can help you not make those mistakes, help you save that money, dramatically increase your learning curve. I mean, literally every day in this trade room, we give you a masterclass in what it means to be a professional trader. And being a professional trader doesn't mean you have wild swings in your account. It means you grow your account steadily every day. In the last 2 weeks, we've booked well over 300 handles in 2 weeks. And trading is not about being right all the time. Trading is about risk management. It's about keeping your losses very, very small, a couple handles, not 6, 8, 10 handles. But professional trading is about risk management so that when you are wrong, you know as soon as possible that you're wrong. And you keep very, very tight risk management guidelines in place so that as that trade starts moving in your favor, you start taking profits. We trade in thirds. And what that means is when we're in a trade and it starts going 2 to 4 handles profit, we take off a third of that trade and we adjust our stops. So if that trade completely flips around, you're not losing money. And so if you're wrong, it either ends up being a scratch or you book a couple handles and then you look for the next trade and you do it all over again. So we take that first portion of the profit in thirds. So we when the trade starts going in the, and typically we're looking for 4 handles or more. on the first third. But today was as difficult a trading day as you'll ever find. And look, and I don't mean this in a condescending way, because early in my trading career, I probably lost more money than you can imagine in trade, because I didn't have anyone to teach me. And so, having developed this algorithmic system, being blessed to have had some of the best traders, day traders, as mentors, we not only have this deep toolkit of mathematical algos, but I believe we have the best risk management of any day trading room anywhere, period, end of story. And because of that risk management, that's how you get a track record where you have one losing day in December and one in January, and each of those days was no more than 3 handles. But you're booking handles in chunks, because when you're wrong, it's a couple handles, and you will be wrong as a trader. And you have to get up in the morning and understand you're going to be wrong several times that day. But you keep the losses to a very small amount. And so if you get just a little bit of movement when you're trading in thirds, you're booking 10, 15, 20 handles. And I'll show you an example. And anybody that tries to sell you a trading system or sell you a subscription to trading service, if they don't show you this, walk away. So here we had a difficult day in the morning where, this was a trade where we only booked a handle. And here's a trade where we only booked, there's a trade before that where we booked 3 handles. And those were the ones where we were wrong. And then we get in a trade that we entered at 11:52. And after those trades where we booked a couple handles, on that particular trade, we booked 2.5 handles on the first third. Then after you book that first third, you look where you're going to take the middle. Now, normally we're looking for 4, 5, 6 handles on the first third, but when it's a tough day and it's choppy, then you take that first third quicker. So after we had several trades where we booked a couple of handles, we got in a trade at 11:52. We shorted at 33.03 with a 2-handle stop. Now, I want you to stop for a minute and think about that. If you're especially the new traders, when's the last time you set a 2-handle stop? So you can be wrong if you set tight stops. Now, you can't just throw on a trade on gut feel and put a 2-handle stop. You have to have math behind it that indicates that stop doesn't need to be more than 2 handles, because if it goes 2 handles against you, the math says you're wrong. So you have just a small 2.5 handles on the first third. We took the middle at +6, and then it moved back up, and we booked those 8.5 handles. Then we have a trade we entered at 221, the same price. See, when you're wrong, you don't let it go the other way and hope that it's going to turn around. So 221, we got short again, 33.0250. Took +2 on the first third. We just the stop down. We got stopped out of that trade again, made a couple handles. Then at 3:15, we entered another time. And on that trade, it was +3 on the first third. It was +5.5 on the middle. Now, I held a runner we're talking East Coast time, 4:15 close, and then you have that 30 minutes from 4:30 to 5. Well, I saw this spike up, and this is nothing more than we're going to run these stops because we don't want anybody to be short in Globex. I mean, it was incredibly obvious. So right before 5 o'clock, a couple minutes before 5, I put one ES E-mini back on. All right, so I was down to the runner, and I saw that, and that you can tell when it's just a stop run, because they don't, and I don't mean anything conspiratorial by that, but ES runs stops. That's what it does. And the thing about ES, the metaphor for ES, it's like a train that's leaving a station. And the job of ES, the job of Mr. ES is for that train to leave the station with as few people on board as possible. And that's what it does. And when it runs the stops and the machines don't see that there's any more stops to run, then it'll take it the other way. Pardon me. So I put that contract back on. Now on the first part of that position, +6, move the stop down to 33.01. +10 on the middle, move the stop out again. and then gets stopped out at 9:02 at 32.97, trading a 3 lot. That's 20 handles. So now we're over 30 handles for the day. Now, that stop was at 97.50. It took us out. Well, if another trade sets up 10 minutes later, you have to enter that trade too. So we shorted again, and this is all in the trade alerts. You can have these pushed to your device. They're in our Slack channel. These are posted in real time. So that short entry was at 94. Again, just took 2, moved the stop to 97.50. Now after booking 30 handles today in this little tiny narrow range, we're in another trade. And that's how on many, many days, we'll book more handles than the top to bottom trading range that day. We trade long, we trade short. I don't care whether, we have no opinions on bull bear, completely agnostic on that. We trade the math, and the math is what allows us to book the handles. Now, as far as our proprietary algo goes, long down here last night, all the way up, flipped short at 636. And here's what's unique about our algo. Algos, or any type of trading system that's built on price, will not work because it's not repeatable. And so what happens is people will build a system, and they'll build it on price. And when they build the system, they'll go back and they'll say, okay, well, over such and such time period, it made X. Okay, well, if it's only based on price, and price is linear, price hypothetically goes from 0 to infinity, nothing that they told you about their past results are predictable or repeatable. There's only one thing that you can anchor an algorithm to, and that's time. Look at a clock, it's round, right? There's the same amount of hours, minutes, and seconds in every trading day. And so the algorithms that are built by the institutions are built on time cycles. And it's not, oh, we're going to buy at a certain time of day or so. No, there are time cycles, and they anchor that, and then the component that looks at price, it analyzes that. But the whole point is, in order to build accurate, profitable, repeatable algorithms, they have to be anchored to time. And there's many time frames. The master time frame that ES runs on, I'm not going to tell you what it is, but put it this way, it's long. It's more than 3 hours. It's a lot more than 3 hours. And all the shorter algos that we use are all an exact fractal. What's a fractal? Imagine you're looking at something on a microscope, real low amplification. And then you zoom in. And imagine let's say you zoom in 100 times. And what you're seeing is exactly the same as what you viewed at 10 times magnification, only it's smaller. That's what a fractal is. So once you know what the master time cycles are that ES runs on, and if you're an institutional trader or you build algos, you know what I'm talking about. The difference is the institutional algos cost millions of dollars to develop, and this is something that you get for a little over a handle a week. But you have to anchor an algorithm to time. And when you anchor an algorithm to time, these little goofy spikes up in price, don't take it out. Most algos, when you get this spike up in price, and again, let me zoom in on this. The algo gets short here. It was just under 3,300. You get a move down here to 32.88. You get a spike up 10 handles. I guarantee you, literally every algo that's built on price either got stopped out or it flipped long, and then the market reversed. Now it's flipping short, and it's going up and down, up and down, up and down. Our algo didn't get out. Yet a 10-handle move, it didn't get out. Why? Because it knows that one bar of price doesn't mean a whole lot in terms of the time component that's built into the algo. Now, if you have another bar like this, well, yeah, then likely the algo is going to reverse and the market's going higher. But these goofy spikes up and down that all they do is run your stops and drive you crazy and get you in and out, long, short, long, short. Our algorithm doesn't care about that because this didn't go up for enough time to be meaningful. Now, what do our subscribers get? Our subscribers get a day trading algo. They get a swing trading algo. You get the live chart, and there's a bunch of stuff on here that I've got scrunched over so you can see the main part of this. But you got a day trading algo, you have a swing trading algo, you have some other indicators that we use. You have these purple bars are an algo on each price bar. Notice that as ES was going up, the only times that it broke this purple intrabar algo, it recovered right away. And then it starts trending underneath this. All this purple line is an intrabar algo. It is literally the pivot within each price bar. And when you see price go up like this, and it took our stop, I just showed you at 97.50, and then price comes back below that purple line, guess what? The trade's back on. All this did was either stop people out or they're getting long into this. So it took us the stop on our short, and when price came down and closed this bar below that purple line, we're short again. And we can do this all day long with that level of precision. We don't guess. One of our company slogans is no gimmicks, no guesswork, just math. And to be fair, it's a lot more than just math. It is extraordinarily complex, immutable time cycle principles. And that is why we will put our algos up against any system, no one has taken up our offer. I record these videos almost every night. We didn't have time to do one last night. If there is anyone who develops algorithms and you want to pick an independent third-party tester, as long as we can verify that they're independent, they have nothing to do with your company, bring it on. You're going to lose. And we have that same offer open for any institutional trading algorithm anywhere in the world. Just because we don't charge the millions of dollars that it costs to develop institutional algorithms doesn't mean we won't kick the tar out of them every single day. We developed this for individual traders. We didn't develop this for institutions. We've had offers to sell this, and we're not going to. We've had brokers that contact us. There's one broker that calls us every week. We're not putting this out as a discretionary trading system so people can auto trade it. One of the most important things about our service is we teach you to trade. We teach you to trade like a professional trader with a set of rules and mathematical algorithms to back it up. And this is why we provide more value than any trading service anywhere in the country. Number one, our systems kick the tar out of anything else out there. And if all we did was give you a live chart and that's it, it's worth 10 times what we charge per month. But on the live chart, you've got me talking on the mic all day long. And the purpose of that is we take traders who are very new. You give me a month and I'll put them up against a professional trader. And that comes with the subscription. We're not only showing you how to make profit, we're teaching you how to trade like a professional trader. And that is a skill that once you learn it, nobody can take it away from you. Nobody. If you want to learn more about our service, go to mercurysignals.com, mercurysignals.com, just like you see it on the screen. There are no long-term contracts. We bill bi-weekly, every 2 weeks. Cancel anytime you want. Why don't we bill monthly? Because we don't need to. Because when people start our service, if they do what we say on the mic, they don't leave. We give you a lifetime rate lock, so you can stay as long as you want. Your rates will never go up. Whatever the price is when you join, that is your rate for life. Rates are going up, and they're going up very soon. But whatever rate you join our service at, you are locked in for life. It doesn't matter if the price goes up 10 times. Your rate will never change. You can cancel at any time. We bill bi-weekly because we want to give people the freedom that if at any time they don't like what we offer, they can leave. I don't think it's right that when you subscribe to a trading service, they bill you monthly. Well, what if you change your mind a day into a billing cycle? Or what if you have some unforeseen situation and you can't trade the next month? Well, you've already paid. But we don't do that. We bill every 2 weeks. Now we have two services. We have an ES-NQ service. That's one service. And we have a second service for bonds and crude oil. So bond traders out there, now the bond market is the deepest market in the world, with the exception of the euro-dollar market. Here's our bond algo that has been long since 57.12. And there were a couple times where it got short and then flipped long at a lower price, so it's making money on the short. Short, flip long at a lower price. But it's been long this whole way. And where did it flip? It was long all the way to the top, and it flipped short 63.20. So you've got a 2 big handle move in one day on the short side after being long all the way up from 57.12. I had one of our bonds and crude oil are packaged together. Again, you got an ESNQ service, you got a bond crude oil service. And had one of our bond members called me a week ago. He had been in the service for a week. And I mentioned this on a previous video. He made enough on crude oil in his first week to cover his subscription for well over 2 years. He made enough on bonds in that same period to cover his subscription for another. This guy literally made, I shouldn't say guy, all of our customers are dear friends, and I mean that sincerely. But he made 5 years of his subscription dues in the first 2 weeks. Who does that? Is there an institutional bond algo out there anywhere that can do this? And I'm a very humble person. I talk like this on these videos for 2 reasons. Number one, if it takes talking forcefully like this for you to go to our website and try something that is going to profit you for many, many years, then that's the way I'm going to talk on these videos. But the other reason I talk like this is, again, it's an open invitation. Any institutional algo in the world, you want to take on our ES algo, our bond algo, our crude oil algo, anytime, anywhere, as long as we can verify that it's an independent third party, we will go up against anybody. We'll publish it on Twitter, we'll publish it on YouTube, we'll publish it on Facebook. Nobody has taken us up on that offer, and they're not going to. Because when they see these videos and they see what our algos do, there's no way on earth that they would ever take us on. So we just want you to try our service for 2 weeks. We added 6 new customers today. And we're going to get to a point soon where we're going to have to limit the number of members, because if we get to the point where I can't provide the personal attention, all my subscribers have my phone number. They can email me. They can get a hold of me on Slack. They can call me up. I don't know any other trade service that does that. So please do take a look at what we offer. It will benefit you and your family for many, many years to come. Our website is mercurysignals.com. As always, we thank you so much for your time. We really appreciate it. Those of you that watch these videos, we post them almost every day. The folks that watch these all the time, thank you so much. We've gotten so much positive feedback. But we thank you so much for your time. God bless you. God bless your family. And we look forward to seeing you again soon.